Hello, my great team. This is Anthony. Welcome back to the video and also to the channel. For those who are new, so this is Anthony. So in this channel, uh, we only focus on SMC concepts. So if that's something that you'd like to learn, then you can stick to the channel. So if you haven't subscribed to the channel, please, I urge you to take uh, some few seconds of your time and click on the subscription button and make sure you turn on the notification bell so that you'll be notified as soon as I upload a new video. So in today's video we are going to learn the idea behind the supply and demand concepts. So if you have been learning the SMC concepts, I know at some point of your time, at some point you have come across this idea of demand and supply. So it is very easy. So the logic behind the demand and supply zone. So it's just an area that we mark where we expect to buy from. So for the demand, we buy at the demand area, and for the supply, that's when we sell. Now, uh, for demand zone, is just like if you know how to mark an order block, it is just the same thing. There is nothing complicated here. There is nothing new. So it's like we are just going to combine whatever we have been learning in this channel. I know by now you know how to mark a valid break of structure. You know how to mark a good change of character, at least. And if you don't know how to do it, yeah, there is a video to my channel explaining all of that into details. For now, you know how to enter a trade because I've also made a video on entry confirmation. So still, if you don't know how to look for a valid pullback, I also have a video concerning the same thing. So we are going to combine all that we have been learning into this idea of supply and demand. There is nothing complicated, guys. So into my chart, I have a BTC chart. You can see here we have a BTC or the Bitcoin pair. We are on a daily time frame. So I've begun by saying we want a buy at at the demand zone, and we will be selling at the supply zone. So you need to put across that point. Now, for example, if I illustrate with a structure, you have something like this. You have a sweep of liquidity. Then you can have something like a small kind of consolidation here. Then the market creates a liquidity. We have a break of structure. We also have a fake break of structure. Then around here we can have yeah, we have a pullback, some kind of pullback into this area like this. Then the market does something like this. Mhm. Have a change of character. Then a push to sorry. Uh-huh. Sorry for that. So let's assume we have something like this. So down here, we have some kind of consolidation. Can you see here? We have some kind of consolidation. So now this consolidation down here, it's what we are calling the demand zone. Because this is the area that we would like to look for uh, a buy setup, a confirmation for us to take a buy at this demand zone. So there is this idea of demand and supply that says we want to buy when the demand is high and we want to sell when the supply is high. So this means what? For us to buy here, that means the prices are low. The price sometimes it's low, So it's, for example, when we have some kind of an offer, when you hear something has an offer, that means the prices are low. That is to mean now the demand for that commodity will be very high. So we'll have a lot of clients coming up to buy that commodity or that stuff before this offer is over. That is the same thing with the market. There is this kind of an area here where we have a consolidation. That is the area that we would like to look for a buy to take this market to the upside. And with the same thing with supply zone, we'll just be looking at the same thing. We find a consolidation up here for us to look for a sell, targeting down here. So when would you like to sell your stuff or your commodity, for example? And you can agree with me if you are a businessman or if you know someone who runs a business, you will find that that person will be waiting for that commodity to raise the price. When the prices are high, that is when you would like to sell your stuff because the idea of doing business is to gain profits. So tell me, when, for example, let's assume it's something like a car, and you find that the demand for that car is a bit high. So when demand is high, that means the prices of that commodity will go higher. The prices also will go higher. So you'll find that the people, the person who is selling this commodity will be getting a lot of profits. That is the same thing with the idea of the supply and demand. So this is when you would like to sell your stuff, and this is when you would like to buy your stuff. You buy when the price is low, and you sell when the price is high. Now, this is the area that we are going to concentrate here. This is the area that we are going to concentrate. We are pretty sure that we are bullish. Looking from down here, you can see very well the market has been bullish. Now, I want us to analyze this market from this area. So what can you see here? We can see very clearly that we have a break of structure. We have a very nice break of structure. Now let me ask, do you think this break of structure is a valid one or is a fake break of structure? So if you have said this break of structure is valid, then you are correct. Why? One way of validating this break of structure, we said we must see a sweep of liquidity. And if we look down here, you can see that we have a sweep of liquidity. We have a sweep of liquidity. Can call it an inducement. This law was induced by this candle and it tried to push up, but now this liquidity was not enough. So market had to come back again and sweep more liquidity. And you can see very clearly here, we have a sweep of liquidity. I call it liquidation. So this law was liquidated by the wick of this candle. Now, very nice, we have a sweep of liquidity. And it is after this sweep of liquidity when we saw this break of structure. Are we correct up to that? Are we together? You can see now, after the market swept this liquidity, we went ahead and broke the structure to the upside. And let me tell you something important here. Whenever you see a sweep of liquidity, whenever a market clears an external liquidity, there is high probability that the market will go and clear the internal uh, liquidity. You can see here the market cleared this high here. We have a sweep of liquidity. That means market came back and swept this low down here. The same thing here. You can see here we have a sweep of liquidity. This is not a sweep of liquidity because this candle closed below this. So now market had to come back and sweep more liquidity. So whenever you see market sweeping this external liquidity, there is a high probability it is going to sweep the internal liquidity. And we see here where is the internal liquidity? We have this high, you have this high. Market came back, swept this high, and also swept this high. You can see it everywhere, everywhere, guys. You can see here very clearly Market came back, swept this liquidity. So that means went ahead and swept this internal liquidity that you see around here. You can practice that from your chart, any chart. It's not like it happens on the BTC only. It happens in all pairs. You see here, market swept this high. So what does that mean? There is high possibility that the market will clear this low. They swept this external liquidity, came back for this internal liquidity. You can practice that. You see here, you have also a sweep of liquidity. Market swept this liquidity. Where is the next target of liquidity? You have this I and you have this I. So market swept this internal first, came and they swept this external liquidity that it had left around that area. Now, coming back to here, remember our video today, we are learning about demand supply. So now we have a very nice sweep of liquidity here. But I believe the lower time frame, that will be a break of structure. Although, for us, we know very well this, even if we see from the lower time frame that we have a break of structure, this will not be a valid break of structure since never swept any liquidity within this impulsive. Yeah, there is no liquidity left here. So market never swept this liquidity. Now, after the market swept this liquidity here, so it came back to some kind of demand zone. And if we are marking this demand zone here, so there is something we call the order flow. There is something we call the order flow. The order flow. For example, let me start from this area here. So what is the order flow? The order flow is this pullback. You see this pullback? Let me use this box. This is our order flow. The high and the low. Until the either of them is broken, so we are still in this order flow. You can see here, this is the area when this order flow was broken. We had some small pullback. Now the next order flow will be this high and this low. Until either low or high, it's broken. And you can see here, the high was broken. Now that means we have a new order flow. And the new order flow will be this high and this low. So until either of them is broken, the market broke the law. You see here, this law was broken. That means the new order flow is this high and this low. Until either of them is broken, pull like this, and you can see the law was broken. So the new order flow is this one now. So we pull it to the right until either low or high is what? It's broken. So we pull it like this, and you can see the high was taken out. So the new order flow will be this high and this low. So we pull it to the right until like that. So that is what we call an order flow. Uh, like that. Now coming here, you can see very clearly, coming from this area, you can see very clearly. If I can start from down here, you have this candle high, this candle low. That is our order flow. And if we can mark it like this is my order flow, like that. If we pull it to the right, you can see this is the area that this order flow was broken at this area. Now we push it to the right like this, and you can see very clearly we had a pullback here, and this pullback mitigated this order flow. Can you see this pullback mitigated this order flow and pushed to the upside? If I can mark it again, the next order flow will be this one now. We try to zoom out. This is our next order flow. And what can we see? We saw that if we push it to the right like this, you see, market came down to this order flow, mitigated this order flow, and pushed to the upside. Now, what is our new order flow? This is our new order flow, like this. This is our new order flow. Now, was this order flow mitigated, guys? No, this order flow was never mitigated. That means now there is high possibility that the market will come back to this order flow and mitigate it before pushing to the upside. Now, after you mark your order flow, inside your order flow, that is when you look for your point of interest. And what can we see within inside this order flow? You can see very clearly we have an order block here and you have a fair value gap. So we can do what? We can uh we can minimize this point of interest of ours to this order block out here. But now I would like to mark it from the low, the high of this candle like this. So that's how you refine your point of interest. Now, this point of interest, this is what I mark as my demand zone. In the real senses, you are supposed to mark it like this. This is how you are supposed to mark it. You mark it. But now, since we have a point of interest within our order flow, we refine it to this candle like this. I don't know whether you are getting. Make sure you mark it from the low, the high of that candle. Now, this area becomes my demand zone. So in this order flow, although this order flow was mitigated, we also had a demand zone down here. You see now the reason why market never came to this order flow. Market never came to this order block since this order flow was mitigated. You see, this pullback mitigated this order flow. So that means that's why market never came back to this order block down here. I don't know whether you are getting the concept, guys. Yeah, like this. So I knew very well there is a low possibility of market coming back to this order block down here, or this demand zone. So now I know in this higher time frame, 1 hour time frame, this one will look, it looks like it's one candle higher time. But when you go down to maybe 1 hour time frame, you will find that there is some kind of consolidation within this area. There is a lot of candles within this because this is a 24-hour candle. So inside 1 hour time frame, that means we have 24 candles within this area, representing 24 hours. I don't know whether you get it. Now, having these 2 points of interest, and when we use our Fibonacci tool, we can see very clearly that these 2 points of interest of ours, they are at the discount area. And this is the areas that we would like to buy from. We buy when the price is at the discount, and we sell when the price is at the premium. Now, after the market retraced to this point of interest, this is when we shift down to the lower time frame to confirmation entry. Now that we are on a daily time frame, which time frame do you think we are going to look for our confirmation? So now this comes to the next uh, concept of time frame alignment. So if your point of interest is from the daily time frame, we look for a confirmation 1 hour time frame or 30 minutes time frame. If your point of interest is from the daily time frame, we look for a entry at 1 hour time frame. If it is from the 4 hour time frame, we look for our entry at either 15 minutes time frame or 5 minutes time frame. But the best time frame to look for our entry is 15 minutes time frame. And if your point of interest comes from the 15 minutes time frame, you can look for entry within 5 minutes time frame or the 3 minutes time frame. Because I don't advise people to go for 1 hour time frame because 1 hour time frame is a bit noisy. So you go for either three or the 5 minutes time frame. And if your point of interest is from the weekly time frame, you take the entry at 4 hour time frame. So make sure you write that one down. Now that this chart is from the daily time frame, where are we supposed to look for entry? At 1 hour time frame. So I will go to 1 hour time frame and check whether we have an entry confirmation within what? Our area here. And if 1 hour time frame is not clear for me, and shift to 30-minute time frame. Now, allow me to push this one to the right side like this. Now, this is the area that you want to concentrate at. Although still we had some kind of, first of all, market tapped into this area within this area. But for example, let me just go down to this area. You can go to 30 minutes time frame. I want us to check whether we got our entry within this area. Whether we got our entry in this area. Did we get an entry? Because if I look at this area, someone could have said you have a break of structure here and you have a change of character. But for me, this is not a valid change of character. Why is that? Because this pullback never swept any liquidity here. So this is not a strong high, guys. For me, this is not a strong high. So maybe at this area, we have a small pullback. But this pullback for me is not a valid one. But someone could have said you have a pullback, push to the downside, let market swap liquidity here. Then we have a break of structure down here. We have a break of structure around this area, which is also a good one because we have a sweep of liquidity. So now this becomes our strong high. This high becomes our strong high. And you can see very clearly that this high was very strong. I don't know whether someone is understanding. This high is strong because if we could have marked, if you are supposed to mark a supply zone here, you can see this, you mark all this consolidation here. What you have said before at the start of this video, you said we mark the consolidation, and this is the consolidation that we are talking about. This, if I was to mark my supply zone here, this is what I could have marked. That concentration, consolidation here before the push to the downside. And this is the why we are saying this area is very strong. This eye is very strong because you see, how many times did this market attempt to break this eye before breaking it? You can see, we had the first attempt, market failed. Second attempt, it failed. Until the third attempt, that's when it broke this eye. That means this eye was very strong. And this means that if someone was looking for a scalping here, you could have scalped from this area. Once you see this rejection candle, you could just take part here from the lower time frame. In fact, I think if you go to 1 minute time frame, you can find a good change of character here. Then you get involved for small uh, scalping. You can get involved for scalping because this eye was very strong. So now this eye got broken. Now we have some kind of shifting structure here. Now, this is where you get your first loss. This was a valid change of character, guys. This was a valid change of character. Don't want to lie. So now that means your supply will be not supply but demand will be down here. And this is the only area that you have a demand zone. And you can see very clearly, guys. Did we get a reaction from this area? Absolutely. When the market came back to this demand zone, the market is demand, guys, sorry. When the market came to this demand zone, did we get a reaction? Yeah, market tried to react from this area, but now that means the liquidity that was grabbed within this area was not enough. So market had to come back, uh, get some more liquidity or activate some orders within this area. Then now that is when the real movement came across. I don't know whether someone is getting the concept down within this area. Now, when the market came back to this area again, now let me go to 1 hour time frame. Let me go to 1 hour time frame. Before then, let me go to daily first. Go back to daily. Yeah. about to 1 hour now. If we try to look at this area now, did we get any confirmation entry at this place? Very nice one. This is all what I would like to see. We have this push, pull back, push to the downside, market push to the upside and induce this high. So we have an inducement here. We have an inducement. Then we have a break of structure. Very nice. We have a break of structure. Now after this break of structure, market now push to the upside. This means now this eye was very strong and was never meant to be broken. So if this eye gets to be broken, now we get our change of character. This is now what I would like to look for. Now this is our change of character. After you get your change of character now, this is now when you apply your entry confirmation, what I taught you. You pick your Fibonacci tool, you place from the swing high, the swing low, because you don't know where the market will pull back to. So this is where you could have got your entry like this, like this. Stop loss below there. Then what is your target? 1:3. You can target like 1:3 like that. Because now this 1:3 is somehow close to this eye. You can target this eye like this. That eye. This trade would give you like 3.5 57 is to 1. That is the one thing, one idea, uh, of which that is one of my best entries. That is the best entry that you can get. At least this is how this entry, most of the time it plays out. So that is one thing. Second one, someone could have looked at the demand zone down here, and you'll see very clearly you have a very nice demand zone down here, which is at the discount. And the market left some kind of liquidity above that demand zone. So now this is another second entry that you can get from this area. Stop loss below the swing low. What is the take profit? Above this high. And you can see now for this entry, there is we have high risk to reward compared to the entry at the 50%. But now remember, this entry is risky because you don't know whether the market is going to push to this uh, down here. Market can decide to come under 50% and then reverse. So that is one entry here. Now we have a break of structure. You see, we have a break of structure. Now this is where the idea of scaling in comes in handy. We have a break of structure. After this break of structure, you could have looked for an area to scale in. And you can see very clearly, you have a demand zone down here. You have a demand zone down here. So this is where you can take your second entry, like this, stop loss below the swing low there. And where will be your take profit? At the same area here. You can put your take profit at this eye, like this. And this trade will give you like 4.43 risk to reward, like that. Do you have another break of structure? Very nice. You have another break of structure here. You have another break of structure here. Now this is what happens. After this first break of structure, like this, you need to apply your proper risk management. You can minimize this stop loss, yeah? Because remember here, if you are, first of all, here you risk like 1% here. Before you take this second entry, you need to minimize this entry, this stop loss of yours. You can take it maybe at the 50%, or you can take your trade at break even. Don't know what's the problem here. Sorry. Yeah, what was I saying? You can You can decide to minimize your risk by bringing the first entry at break even before you take the second trade, or you reduce it at the 50% at least to reduce the risk that you are exposing to the market. Now the second trade, now you can take also, you can risk also 1% because you know what you are doing, yeah. And this area here, we are coming from a higher time frame point of interest, so there is high possibility of this trade playing out. Now you have your second trade down there. Do you have a third one? Very nice. You have another break of structure here. Guys, here we are just scaling in. We are just scaling in. Is that a valid break of structure, guys? Not really. So it is just this one is the one that is continuing. Remember, this break of structure is the one that we took this trade. After taking this trade, that is when we have this break of structure here. So this is not a break of structure. Now we have another demand zone. Very nice. We have another demand zone down here. So this is also another demand zone. So you can also decide to do like this. You are just scaling in. Where is your take profit? Within this eye here. So you can decide to put it at this area, or you can decide to put it at this eye here. Because if you go down to 4 hour time, let me go up to 4 hour time frame. You can see very clearly what are we targeting. We are targeting this eye here. But now, for us to get to this eye, the market has to break this eye here. Are you getting? If the market fails to break this eye, that means we are not going to get to this eye. So let me go back to 1 hour. So instead of doing like this, you can, instead of targeting this one, or first of all, you can target the first one. The first trade, you can target this eye. You see, you can target that eye. Then from the second one, you can target now this eye, and this one you can target this eye like this. Even if the second trade and the second and the third trade will fail, at least you have secured some profit from the first trade. And before you take the second trade, make sure you minimize the risk here. Either you reduce it to the 50% or you break it at the break even. Before you take the third trade, do the same to the second one. Either you take it at break even or you minimize the stop loss. Now, like that. After doing so, did we get this, another entry? Let me check. Well, this is where now we have a break of structure. We have a break of structure here. We have a break of structure, that area. Just a minute. Just a minute. Yeah, we have a break of structure at this area. So where do we have a supply zone, a demand zone? We have a demand zone down here. I don't know whether this trade will be tapped in because of the spread. So this is where you could have placed another entry, stop loss below this low. The target, you can put it at that eye like that. You see, guys, just from one setup, you can take a lot of trades. You can take so many trades from this setup. You have a break of structure. You have another tap in here. And you can see now, this trade alone will give you 7.414 risk reward. This one was 4.85 risk to reward. This is 7.94 risk to reward. And this is 5.72 raised to reward. And I believe this first trade could eat the full profit at this area. This area, that is when you eat the full take profit. Now, after that, you have another break of structure here, but now market never came down here. Now, I want to show you the trade that I took this last week. We had another setup. We had a sweep of liquidity. We had an inducement here. You see, we have an inducement down there. After that inducement, we got our break of structure here. We have a very nice break of structure like that. Then we had a fake break of structure here. This lower will act as an inducement. Now, where is our demand zone? Down here. We have our demand zone. Very nice. We have our demand zone. So this is where the trade was from. Like that. Stop loss. Some few pips below there. The swing low. Always make sure you don't have a very tight stop loss. Always make sure you put your stop loss some few pips below this low here. Remember, this is our swing low here. So make sure you don't put a very tight stop loss. And the take profit was at this high here, which was a trade of 3.32 risk to reward. I think it was somewhere here. Yeah, targeting this high here, because we know there is a lot of liquidity above this high. And now, what can you see from only that one setup, guys? Nothing can beat supply and demand, so long as you know what you are doing. You see, from one trade, from one setup, how many trades did we get from this trade? We have 1, 2, 3, 4, and 5, guys. How many risk to reward? For the first one, we get 5. The second one, we get 7, that is 12. The third one, we got 4, that is 16. This one, we get 7, that is 20, is it 23? And here we get 3, that is around 26. Adding those points, we get around 27, 28 risk to reward. If it was a prop firm, only these two trades, you have already passed your both phase 1 and phase 2. So guys, what am I trying to explain here, guys? The idea behind the supply and demand zone, it's very easy and very simple. So what you only need is to practice. What you only need is to practice this concept. And already I've given you all what you need, guys. I don't know whether you understand that. I've already given you everything that you want, everything that you require for you to master this concept. I started by giving you a video on how to mark break of structures. I know by now you know how to do that. How to mark your point of interest. Now you know how to do that. And the next one, I showed you my entry confirmation. At least you know how to get involved. I think the only video that I am supposed to make now, it is the idea behind uh, the risk to reward, how to calculate the risk to reward, guys. I'll make sure I make a video on that. And also I need to make a video on liquidity, explaining how uh, how to identify liquidity, how to use liquidity to our advantage. Because they say if you don't see the if you can't see the liquidity, you yourself will be the liquidity. So I'll make a video explaining that. And I believe at the end of all that, you will have the full package of what you call a trading plan. And I was even getting to forget, I also made a video on my checklist, what I always look for before taking any trade. So make sure you learn that video. It's also one of the very important videos that you can find in my channel, my checklist. Because remember, checklist The checklist and all what you call the trading plan. You need to have a trading plan. Like in every business that you run in this world, you need a trading plan. And I showed you my only trading plan or my checklist that I always use before executing any trade that you will ever find me taking. So guys, I would like to start at that to stop at that point. If you have any question, please make sure to leave it on the comment section. And as always, I also try my level best to answer each and every question. And also you can tell me in the comment section which area do you want me to tackle next. So until next time, guys, it's a bye bye for now. And before I go, please, if you have not subscribed to the channel, make sure you do so. And also make sure you share the video. Uh, you leave your comment there. And then we'll see you in our next video. Bye bye for now. See you in the next.